been a tough year. I want to go more into the impact it's been having on small businesses. This is some information from the United States. Almost more than 150,000 commerces and merchants have had to close down because of the pandemic. Most of them are small commerce merchants, restaurants, retail, beauty, some bars. And this has an impact in the economy as a whole. In terms of Europe, the things are not that different. A survey from McKinsey, where most of the European countries and the businesses there have seen revenue reduced somehow. There are very few businesses that are really being able to overcome all these problems. Those problems are not only for the businesses, also for the fintechs. There's been this huge fintech boom all over the world. In Mexico alone, there are like over 400 different fintechs that have been born in the past year, 2 years, from lending to Clar, latest Gianluca's venture, and all of those. In Europe, for example, Revolut and all these banks, they've had some really big valuations, and they say they're worthy a lot of money. But when we go and see the actual numbers, we see that fintechs and banks also need to really increase their income and their revenue to be able to live up to those numbers. With all this information and with all this, we started thinking about how we could help people reach this and create this. And we did this because a good friend of ours, he started a business after like 6 months of working and everything. He opened up in about February, March of this year. And sadly, because of the pandemic, he had to close down. And we were thinking like, well, he's really capable. He's a great entrepreneur that it's always pushing. And now, he had to close down because something that he couldn't control. So what we said is, we believe in people. We believe in the ability of people to thrive, to go forward, to do better things. We can, every challenge that it's put in front of us, us as a society, as a race, we are able to move forward. But most of all, we are able to be successful. As history tells us, every single time, we're always growing and always being better. So if we believe in people and their ability to be successful, we said, well, technology should help us as people be successful. And take it down to fintech, which was the thing that our team was more involved with. And it's, we're asking ourselves, how can we help these amazing people overcome these difficult times? It's all about incentives. We all have our carrot. We all have our favorite color on the M&Ms. And if we have the right incentive, we can create all this successful and all this line of success will come. So basically, we try to look for what are the incentives for the 3 players that we see on rewards programs, loyalty programs. So basically, you have the financial institutions that, the problems they have right now. If they want to create this rewards program, it's expensive. You need to get some developers. Then if you hire a third party, they're going to charge a lot. The program, it's not really that user friendly because the user will have to download another app maybe, or they'll get these points, and these points they'll have to exchange it for something else, and the value of the points is really small. In the case of fintechs, for example, they've seen that the business model of the interchange fee, it's not enough to be profitable. We saw the graphs there that they really need to increase those revenue streams. In terms of the merchants, if they say, okay, I'm going to do this loyalty program, well, they have, create this integration. They have to train all their team, maybe change the way they even have to charge for something. And then, the customer says, hey, I'm part of this program. You need to give me this discount. And maybe, if you're in a restaurant, the waiter doesn't know about that program. So the experience for the consumer, it's really bad, so as a whole, the whole process and the whole idea of rewards programs it's a little bit broken, and no one really here has an incentive to be part of a rewards program. That's where we thought and say, okay, let's just align the incentives and make sure that everyone has an incentive that will make them be part of this ecosystem and that it will make them win. So basically we said, okay, what are the things that each of these players can put into this ecosystem? So financial institutions, they got the visibility, they got the consumers, this whole network, and they got a banking app. Users will have their banking app, they will give importance to that. There are not like a lot of rewards apps that you'll say, okay, I'm not going to use it daily, or I'm not even going to use it monthly, so I'm going to delete it. That's not the case of a banking app. It's there and you will need it. So it has, this real estate on your smartphone. So they can bring that into the table. Then you got merchants that they can say, hey, I want to incentivize people to come and visit me. So I'll give them a cashback reward. I'm able to put some money and say, okay, I'll give a 10% cashback whoever comes here. So that's what they can bring to the ecosystem. And then of course is the consumer, which they consume, which is pretty important. They got the money and they are the ones that make everything go. So yeah, they will bring their money. They will also be able to bring new consumers for merchants in case of word of mouth, whenever they have a good experience. This way, if each of these three players put in their contribute one of these things, what we create is this win-win ecosystem where everybody wins because all the incentives are aligned. So for example, the customer will pay by card, and the financial institution will be connected through an API to the Reworth program. So the financial institution is able to show all the offers that merchants have, and all the things that the cashback promotions they offer, and they will be able to show them on their app. This way, they'll increase the amount of transactions with their card, because if you are gonna take out a card and say, okay, which one am I gonna use? The one that it's not gonna give me any reward or anything, or I can use the one that it's giving me, a 10% cashback in a place that I really like and that I want to consume. So basically, they increase loyalty on the financial institution, which increases the transactions, and for the merchant, it will bring them new customers. Why? Because this customer saw on his bank app that a place that maybe he has never been to, but it's close by, has a 10, 15%, 20% cashback. And that's a really good incentive for the customer to go there. So, as the merchant gets, the new consumers, they increase sales, they provide this cashback to the customer. And that's how this whole ecosystem, keeps flowing, and everybody has a really good incentive to be part of it and make it also, which is most important, relevant to this consumer. It's if the one with the money doesn't find it relevant, the whole thing fails. So it's important for them to it's relevant. So how does it look this in the customer journey? So basically what we do is we onboard all the merchants we can, and also the financial institutions. They connect through the API, so they can offer all these cashback promotions on their app. So basically, once the merchant is on board, we ask them to give a cashback promotion well, two actually. One is for the first time customer, and one is for the recurring customer. Let's say, you give a 10% cashback for the first time someone visits you and makes a purchase, and then a 5% cashback for recurring customers. We validate that promotion is valid, and it meets some quality standards. So whenever the bank publishes on its app, they can be secure, and they know that the quality of the promotions that they are showing to their customers is good. So then, here is the bank user. He goes into his bank app and he says, okay, this place that is nearby has a 5% cashback. I've never been to this place, so I'm gonna go, get dinner in that restaurant. So then the user comes here, and the process is really standard. The waiter in this case, which is a restaurant, comes up with $100 bill, and Erika, the name of the user, pays the full price of the bill. A couple of moments later, Erika will receive this notification from her bank app that says, "Hey, congratulations, you got this cashback from the restaurant and us," and that provokes a really positive experience for the user. It creates this idea that, hey, this is amazing. Whenever I pay, it's just money going out, and now I get this cashback. So this really can modify the behavior of the user. So we create this loop. When the next time she goes, she'll open the bank app again. She'll see for more promotions, and she'll consume in the restaurants and the retail or whatever the commerce is that is part of the Reworth program, and she will use the bank's card and get the cashback. I'm not going to go into the technical details of how this happens. It's a pay-as-you-go model for the merchants. So whenever a cashback is done, we are able to charge them for that percentage, and then that money we give it to the bank, and the bank can do the dispersion of all that money to the right user. How can the banks, in this case the financial institution, use this cashback? So basically cashback, and at least in Mexico, cashback, it's not really that common, and it's something new right now. I'm not sure if in Georgia it's that common, but it's basically, you pay, and then after the payment is done, the merchant gives you some money back. So basically that's the pure cashback moment, when consumers just get the money. But also in terms of helping the financial institutions, if they receive the money, they can go and say, okay, all the cashback you get, I'm going to put it on your savings account. So that way, every time you spend some money, you'll also be saving. They can also do crypto. There's a startup here in Mexico that whenever you use their card, you get a percentage back in Bitcoin or Ethereum. You can choose which of the crypto currencies you want. And you're also able to, the bank might say, there are a lot of eco-friendly banks right now and fintechs that their value proposition is, we are carbon neutral, and they can do everything you get from the cashback will be supporting a project for, helping reforestation or, some climate initiative. So actually, the bank also gets this option to really help in their value proposition and in a strategy point of view, really push their reason and create a stronger connection with their users. What do we get with all of this? Data, a lot of data. As Gianluca said, if we increase the number of bank transactions, of credit transactions and card transactions, banks are able to offer all types of products. It's not only for a credit line, but they could also, if they have some insurance, So if based on your consumption, they can create a really personalized insurance plan for you. They can do, real estate, like why the possibilities are endless, because we build a bridge in having two of the most important data sources, which are transaction history of financial institution, but also we can get the item by item data from the merchants. So basically, using machine learning and artificial intelligence, we could be able to say, okay, this person will probably buy this exact product in the next month or week, or whatever the time frame is. So basically, it gives us a really great prediction tool by analyzing all this data, and this can help, something like big brands say, hey, what person should I target on my campaign? And I'm able to say, well, this user consumes more of the type of products you have, but he's never tried your brand. So you can create this marketing campaign of, sampling and try for the first time this campaign, and the effectiveness of that campaign can be, way higher than it actually is right now. So basically, that's a bit of what we say, and we'll say, do something great. We got all this data, so our focus is to help those people create successful businesses with all this data.